Hello, Warriors. Mary, Shahab, Mike, Bran, Alexander, Sinatra. Everyone ready for the Consumer Pain Index tomorrow? Probably not doing too much today in front of it. So team and attendees, I have a question for everyone.
Oh.
Ready?
No.
Are you ready, Ryan? Because you're invited too.
As long as it's not
Is it
that
on
Asian...
UFOs?
Wouldn't you like to ride on my beautiful balloon? Huh? Who's ready?
Or my beautiful Chinese balloon?
Yeah. What's with all these balloons? It's like being at the circus.
I don't know, man.
Anyone know what they are? They're octagons, there's cylindrical, and kind of weird. All right, anyway. CPI tomorrow. So I mean, I have a hard time wanting to do anything in front of it. I don't think that the Dixie has, run enough for this correction. So my bias would be, if it comes in good, to buy a break near 102. Both the yen and dollar look the same, kind of. Yen looks a little better, but on 4 hour, looks here, maybe we pull back again, and on a good number, and the dollar pulls back again. But I don't think this is the end of this bear market rally, and I still think the yen has 35 in it. So it's almost looking like this has become an important area now. And let's just go horizontal line right here, and you look left, and you have this, right? So if you take it from the bottom, 27 to 32 would, if you want to have a bullish narrative for it, would measure 37, and the 10-year almost got to the target off the head and shoulders breakout, was about 380. So we're about 5 bips away. So I think this was decisive. And I'm not sure if it's just a bear market rally. I know that I have some disagreement that they should have some trouble getting through 380, 390. So, I mean, everything's just poised for maybe a bad number tomorrow. I think Blake was talking about that possibility last week. S&Ps, almost looks like a flag, and it's going to run again. I'd say under last week's low, so it's vulnerable. So I think we held 70 or 60. No, it was 50. I'd be careful under 40 and a half. I think this was important for a continuation move. And how do you think stocks will react? They're holding up pretty good with the rise in yields. What are you guys thinking about risk if yields keep rising?
Well, yields seem to have, if it wasn't for CPI tomorrow, we would have said yields are breaking out, because they have broken out of the descending trend line. But
let's look at it. I don't have that line.
Yeah, hold on.
I'll stop sharing.
Let me show that. Desktop 1. So yields have broken out,
okay.
Albeit by a little margin. But tomorrow is the main event, and if it wasn't for that, I think we would have been talking about a new leg higher in yields, which means a new leg lower in stocks. But that's not. It's not happening yet because the market doesn't know what's going to happen tomorrow. There's a lot of confusion and views on both ways, and at the end of the day, it's a big question mark, tomorrow's number. And I said on the flow show, I think the worst possible scenario would be to get a number at expectations, which is 6.2% year on year, or maybe 0.1 lower, or somewhere around there, and that will mean that the market doesn't really do much. But man, if we get a beat either way, higher or considerably lower, then we're going to get fireworks. So if we get a big number, so 6.2, 6.3 and above, I think that then probably confirms that the Fed is going to stay at least, if not at higher rates than the market's expecting, at least at that level for longer. So if that happens, then this tug of war that's been going on for weeks and weeks between the Fed and the market, so the Fed is saying one thing, the market is not buying it, at some point it's going to have to resolve itself. And I said earlier today on the Flow Show that it's like a tug of war where both sides have been pulling really hard. At some point one side just lets go. What happens? The market moves violently the other way. So I think stocks are at the big risk if the number comes in hot. Having said that, I don't think it will. I think it's going to disappoint and come in lower. I think it could come lower than 6% easily. And I know I sound crazy when I say that, but that's my opinion. I could be wrong, but I think that's what's going to happen. And if that happens, then stocks are going to find support for sure. And these highs here are probably going to get taken out pretty quickly, and then we're really looking at 43 to 4,400 in the S&P.
Isn't that interesting? S&Ps break out of a downtrend first, and then rates follow it. It's almost like they're leading.
Yeah, stocks have been very resilient. You said it, Dale, and it's true. They have been trading very well considering what's happened in the past year or so. Down from 4,800 now up to down to 4,100, and they've tightened. The Fed has tightened faster and harder than I've ever seen. And if you had told me that the Fed was going to be doing 75s, I would have told you that stocks, at least momentarily, at least in the short term, would have been a lot lower than here, but they're not. So it's an interesting balance that we are at, and I think tomorrow there's going to be a big move coming, and best to be nimble and not have big positions. I have very little running.
Hey, Stel, good morning, by the way, and hope everybody had a great weekend.
Good morning.
Yeah, good morning. We are just to let everybody know, we have made it past the two big events that were happening in my backyard this week. We had the Super Bowl last night. Dale, what a great game. Did you watch it?
Yeah, it's Super Bowl indicator says short S&Ps.
Well, there you go. But it's because of who won. Stelios,
okay.
you got to get with
the Super Bowl indicator. Yeah, so if a team from the old AFC wins, it's bearish. From the old NFC, it's bullish.
And that's the same thing as trying to figure out if the Chinese New Year Lunar New Year is gonna make you a billionaire or not. Same thing. But
a balloon ride.
But we got past that. We got past. We were out on over the weekend, and I saw celebrities at the restaurant that we were at. I mean, they're everywhere here in my neck of the woods for the
game,
for the golf tournament, the game. Because we had the waste management. It was just mayhem here. Anyway. I wanted to say, Stelios, regarding your outlook, this is where we get the no landing scenario. Where everybody's like, are we going to have a soft landing, hard landing, and no landing? Is now what ever since last week I started talking to some other folks last week. Everybody's like, we might have a no landing, and meaning that. That everybody panicked for nothing, and we're gonna be good to go. I mean, what do you think? I mean, if we have literally inflation continues to come down and the economy stays strong, we just continue on then, right?
So inflation coming back down towards target slowly without us having any kind of major crisis and unemployment remaining strong.
Real big economic impact. We got no landing. We just
if the Fed engineer that, I'll tip my hat to them.
Hey, Stel, before you go, I did want to ask you, what levels are you looking for new purchases in silver and gold?
Well, I took a very small. I started a quarter position at 22.40 something. So that's
Okay.
you know, I'm starting very slowly. I'm going to be adding all the way down to 19 basically. So this this is a big triangle, whatever you want to call it, and I think there we could see, you know, a move towards
21.
here.
Yeah.
Before
there.
higher. I don't know, you know, it's something I want to own always, and so that's why I started very slowly. Because if tomorrow is a big miss, then you know, guess what happens? We rebound really strongly from this zone and going back towards this trend line resistance. So, you know, I want to have something in it. Gold, it's a little bit tougher for me. It's not as clear, but I'm not going to do anything gold ahead of tomorrow. I don't know is the answer. Gold, I'm probably just going to buy a breakout when that happens. But I don't know.
But how about a breakdown? What happens if it breaks down to 1800, which I think is going to happen?
I'd buy it there.
Would you? Gold, if
it wasn't a perfect spot, I think that spot will work out over time.
1800. Yeah. For me, really, I'd be buying 1600s in gold. I'm not going to touch anything before. I don't know.
1600, huh? Wow.
If you know, if that ever materializes, you know, it's not. It's a big question mark.
Yeah. Okay.
Well, you know, when you're talking about 1800, you're really talking about near the 200-day moving average, and halfway. I mean, I mean, if you do think that it's a bullish kind of playing instrument, then you can play it off of that level. I think over time, you know, you're probably going to get some sort of two-way price action down there, I would assume. So
it may take a month or so to, you know, have some chop around before the next move.
Yeah. So
wave is pretty powerful. I have to give it the benefit of the doubt that it was a 5-wave advance, and that I should be buying a 50% retracement and not get cute.
So, well, and here's like the 200-day moving average. This is what the flag pattern would look like if it completely plays 17. Out. You know, it's gonna take us down towards these levels, and which would be 1780 roughly. I think is what we're looking at. So I want to see what you guys talked about on the flow show. You know, if we missed, well, you know, those of us that missed it. Ryan, we haven't heard much from you today. What do you think about this? This inflation data that's coming out tomorrow. Do you think we're going to have a soft or hard landing or a no landing? What's your opinion here?
Well, it's going to be a big number. You know, it could be either way. It either confirms the trend that we've seen for the last 8-9 months, which is inflation coming lower. You know, if it plays out as Stelios pointed out, the risk, you know, when they pull out some of the backward numbers, it could be a bigger drop that could shock the markets. It could be more stubborn and it comes in above. It's a binary event, really. You've got to look at both numbers. We could, you know, dollar yen, we could be trading at 135, we could be trading at 127. Who knows? If you're trading the yen, you've obviously got to factor in what happens with the Bank of Japan tonight or early hours of the morning, because we get the nominees confirmation of who's in the running for all the jobs at the Bank of Japan. So, you know, that could kick dollar yen out of kilter with what we've seen in yields. And then you've got to think into the CPI. Is it going to reverse or is it going to add to that? It's a bit of a messy one. And, you know, as Dale said, and the others have said, you know, I'm not inclined to do a lot into it.
All right. Well, you know, I'm the same way. I'm going to be like I'm going to just be sidelined until we get through this data. Do you feel that the inflation data is going to come in hotter, or do you think it's going to come in weaker? I mean, Stelios is pretty, you seem pretty confident that you think that inflation is going to continue to moderate. But then again, you know, and I want to point this out. We've had a couple of central banks this last week, 3 actually, that came out fairly hawkish. And, you know, they still suggest that there's more rate hikes coming. You know, when you're talking about Banxico, RBA, and Riksbank, and, you know, do you believe that? I mean, that's the ultimate question is, you know, these central banks are like, look, our job's not done. We have higher rates coming. And I mean, are they seeing something that we don't see?
No, they're all scared. They're all scared because of the they got their reputations handed to them over the last 18 months, 2 years, and now they're scared of being wrong again. You know, they want to claim victory over CPI coming down, and largely it is, but you know, it might turn around again, and then they don't want to be caught out on that side, having just done a victory lap saying that they've fixed everything. So
Yeah,
they are
I mean,
scared, and I think there's a lot of second round effects still to come into the market in various countries. You know, wages. You got a strong jobs market in the US. Wages are still going up. You know, there's still pressures there that say inflation isn't ready to you know, crater or come all the way back down again.
I don't drink WTI either. Do you drink WTI?
The what? Sorry,
WTI is still holding up.
Do you eat or drink WTI?
We definitely don't eat it or drink it.
No, exactly.
Okay, so what's changed at the stores?
Right. I mean, I don't know, man. I again, here's this chart of, you know, CPI. I know, Stelios, you think there might be a downtick here, you know, maybe down towards this 4 to 5%. I mean, but still, does that change the overall picture of you know, CPI, you know, to a point where the market's got to go, well, you know, we think that we're past the worst. I mean, I don't know about that. That's why I'm pretty skeptical. First of all, I'm skeptical that the data is going to be too weak. But I'm also skeptical that about what all these central banks are saying. You know what I mean? You know. So anyway, I don't know. And then what Dale brings up is crude. So let's take a look at crude oil really quick. You know, we got crude that, you know, is strong thanks to Russia and their, you know, production levels that they're actually, you know, decreasing production. I mean, it's going to keep crude oil, you know, pretty elevated at this point. So anyway, so Ryan, what else do you guys talk about during the flow show?
Aliens.
You talked about aliens and the balloons. There's a lot of shooting down of things going on around here.
Did you know you can trade a UFO tether cross?
No way. I don't know.
Yeah. Type in UFO into your trading thing. Gavin in our room.
I don't even want to know about that. All right. Well, Dale, what are your thoughts here? I mean, you talked to a lot of really smart people throughout the course of the week. How do you feel about, you know, the CPI data coming out this week?
I think we're kind of due for, you know, a negative surprise.
Negative meaning a hot print?
Yeah, that maybe we got a hot print.
All right. Well, what do you think is going to happen with the S&P here? Because we're just, you know, we're stuck in this. I'll put it in the range that I talked about during the week ahead video. This is like really below 4,000, above 4,200. You know, I always talk about this during big releases. Anybody who's been listening to me for, you know, any amount of time, decade, 2 decades, they know that when you have a big important piece of data coming out and the market's really not certain, the market tends to go mid-range. I think 4,000 is a huge level support. I think 4,200 obviously is a big level resistance. We happen to be at 4,100 right now. So
take a look at the VIX. It's moving away from 17, which was the low print a few weeks ago.
Yeah, I mean, VIX looks like it's coming off of support.
Broke a downtrend line.
Yep, it sure has. We pivoted off a lot of support here. Maybe
that's the tell.
So you think that this has given us that early indication that the S&P could be more vulnerable to the downside on a hot print? Yeah, I don't disagree. And you know, you got too many people, you know, that are like Stelios, that are just optimistic that things are going to be great. There's rainbows.
Most people actually think that inflation is going to come in hot. I think from what I read and talk with people are saying,
I thought you were talking about, you think that inflation is going to moderate.
I think it will, but most people I've interacted with think no, it's going to be high inflation. It's here to stay, etc., etc. Well, high prices are here to stay, but the rate of change. We've talked about this. Rate of change is going to diminish eventually. But anyway, let's see. I could be wrong. I've been wrong many times in my life, and I'm not afraid to admit it.
No, there's not. No,
this is time to talk about your first wife again.
I didn't mention her. You did. Okay.
And here comes Steve. Here comes Steve. Steve, so what are your thoughts going into this week? I mean, here we are, really important data, probably most important data of 2023 thus far. What are your thoughts here?
I'm going to go on a limb and say that I want to trust the technical picture more. Which means that of course, I cannot predict what the CPI number is going to be. CPI, any given number can be volatile from print to print, although I don't disagree with Stelios' comment. Without being able, obviously, to predict what the number is going to be, I'm going to say the following. I think the dollar is likely not done rebounding, which means that if the reaction to the CPI number is dollar negative, I think that will probably provide a nice risk-reward opportunity to buy the dollar for another leg higher towards 106.
Like it.
All right. Well, and speaking of which, since you're pointing out the dollar, I mean, this is that bullish outlook that Steve is referencing here. We have a flag pattern. We're up right against the 618 retracement. It's actually also, and I'll just draw this out for you guys so you can see it. If you take the last leg lower, right, and you take that last stab, we went to new lows in the year. We're at the 161% extension of that move, and so between that and the 618 retracement of this last move, the whole move lower, it's right at 103.80. And you can see how we're nudged, 85. We're really nudged up against there. And like I said on the week ahead video, a break above 104, holy cow, that would be very, very bullish in the dollar index. And that would actually put us up at 106, as Steve is discussing. But what Steve just said, just to clarify, is if the data is weak, it could give dollar buyers another opportunity to buy it lower for the eventual move up to
I think towards 102 the risk reward is very appealing.
Yeah,
that's what he just drew. So
somewhere down where there's 102 and a half,
and Blake drew it.
102 would be a little bit lower than that. So let me ask you this, regarding the dollar, that really just ultimately suggests that you think that the euro will probably come back towards maybe parity, 102, somewhere down there. I personally think that if the euro should get back down, and you just take a look at the euro, it's actually broken this channel. This one right here, you can see it, pretty good channel that we've had. We're consolidating below the 618. If the euro does trade back towards, let's just say somewhere down here around 102, 103, I think that's going to be a wonderful level to be on the long side of the euro.
Yeah, I agree.
For a long time.
I agree. I think in general that the likely dollar rebound that we're talking about is going to be corrective in nature.
Yeah. I agree too. And I think the euro's pretty it's showing some signs of weakness here. One of the things about the euro is you got to factor in what's happening in the energy picture there. And do you guys have any feelings, and what are your thoughts about what's going to happen now that we're getting past winter? We're getting close to spring. Are we going to get another offensive from Russia, going in now that everything's kind of thawing off? Well, it's getting close to thawing.
I think only Putin can answer that question.
Yeah. I mean, Dale, you have your opinions about what's going to happen in Russia. What do you think is going to happen there?
An escalation with an invasion attempt. on different fronts. This is existential for Putin. And this is also something that he has wanted to do since the fall of the Soviet Union. I don't see him backing off. I think the only thing that stops Putin is if, his heart stops.
Well, that's oops, I didn't mean to do that. That's always a risk. Well, we have just about 5 minutes before Dale brings in Larry Tantanelli, or is it,
Tantarelli.
Tantarelli. I just pronounced his name.
When you really think
sorry,
about
Larry,
it,
if you're listening in.
When you think about it, we're in World War II. It was, Hitler and the Japanese, and it took only two crazy men to really, get a world war going. And I think between Putin and Xi, I think they also want war, and I think that we're fighting a proxy war with Russia right now.
I would agree. The only part I would disagree with is that they're crazy. I think they know very well what they're doing.
They have a different attitude about the value of life.
Oh yeah, of course, but they know what they're doing.
That's crazy.
Yeah, but they're serving a specific plan they have in mind.
Yeah. Okay. Well, they're rational maniacs.
Yeah, I would agree with that comment. Yes.
Okay. All right.
All right. Well, Ryan, what's your best idea for today other than sitting on your hands? If somebody put a gun to your head, what would you be trading today?
Mate, if someone put a gun to my head, then they'd probably shoot me because I'm devoid. I'm devoid of ideas, unless something happens that I get a decent level to trade. I've got my sniper rifle out. You look at your charts, you pick some levels. You might fancy a scalp off. Maybe dollar CAD down to 133. Aussie dollar down to 68, 70, 80. But I'm not going to go out on a limb on any trades at the moment.
Got it. Okay, I tried. Stelios, I'm gonna stick a gun to your head. What are you gonna do today?
What I would do is I'd sell dollar MEX for 1 day and collect the carry.
You didn't. You just channeled your inner K-Man. He's not. By the way, K-Man's out. He's got some road work happening apparently close to him. So he'll be back tomorrow for the CPI, which we will be covering here live. And Dale specifically did not schedule a guest, so we can stick with you guys and gals a little bit longer tomorrow. Mm-hmm. So make sure you're here tomorrow for the CPI data print live. We'll be covering it. We'll be, analyzing post CPI, seeing what the best setups are. It should be a very, very big day tomorrow.
We'll be saying how I got it right, etc. Right?
Yes, exactly. We're going to all congratulate Stelios as we.
That's going to be the conversation. So now that you know, you don't need to be there.
So Steve, I've got a gun against your head. What are you going to do today?
Today specifically?
Yes, but today specifically.
Anything else?
Come on, give me a tradable idea.
Anything else than trade?
Oh God! All right. You know what? Stick a gun in my head. I'm selling gold today. It's in breakdown territory. It is a bear flag pattern. It can't get out of its own way. I think it goes lower today. I think gold trades down towards 1840, down towards this 50% retracement. I think anybody who's long gold is going to get they're going to get weak knees today. That's what I think.
If you look at gold and then you look at Bitcoin, it's exactly the same consolidation. So if you're going to be selling gold, might as well be selling Bitcoin. If it's going to move 3 times as much.
Here, we're not playing favorites.
I think Bitcoin's a break to buy.
But it's similar. Look at
20.
it.
Yeah, look at Bitcoin. It came out of its channel. It led, by the way, just so you guys know. And if you're, in the ForexAnalytix community, we knew it last week. It was leading the charge lower. It broke down before everything else. And then everything started to move after Bitcoin moved. Bitcoin had a good hour on the rest.
It was me buying, Blake. It was me buying.
It was definitely Steve that was selling his whole empire of coins. What's interesting about the Super Bowl ads? I didn't see any crypto commercials. Did you see any, Dale?
What a surprise!
No crypto commercials here. Interesting.
Matt Damon
all right,
was in a different commercial. I guess he's not the bold and the brave anymore.
What Brady?
No, but Matt Damon was in some
Oh,
Super
Matt Damon.
Bowl
Yeah. Well, they had there's a commercial with with Tom Brady throwing a football through Matt Damon's window, which maybe that had something to do with last year's crypto push.
Yeah.
Anyway,
Doesn't sound unlikely.
yeah. I mean, it was interesting. It was them and one of the late night comedians. I think it was Jimmy Kimmel or something like that. Anyway, I was actually not impressed with the Super Bowl commercials. I was more impressed with the game, which is good.
Yeah.
At least we had a good game. So, hey, I want to say tomorrow's going to be a big day, everybody. And you know what? Couple things I'm going to leave you with before we pass it over to Dale to interview Larry. Which you guys should stick around because he has a great handle on internals on what's happening in different sectors of the market. Make sure you watch this video. Where is it? Right here. Nick's video from the trader funding program. And this is one of our traders for the trader funding program. He's failed a couple assessments, but he passed some big ones and he's had some big payouts. So make sure you watch this video. I'll put that in a link here. But the reason why I say that is tomorrow's going to be a great day for trading. And if you guys are like interested in the trader funding program, this is the day to get started because tomorrow you're going to have a lot of opportunities in the market. Probably when I say a lot of opportunities, and let me clarify here, and something I talked about during the week ahead video, there's a lot of room to move after tomorrow. Tomorrow's going to be a pretty directional and I think it was Stelios or Ryan who said it. It's going to be a binary event tomorrow, but there's going to be a lot of room to move for the days following tomorrow's data. So there's going to be a lot of, you can use the term runway. So if you guys are looking to pass an assessment, you're going to get volatility tomorrow and probably the remainder of the week as a result. So if you're interested in the trader funding program, this is the time to do it. Dale, I'm going to pass it over to you. I want to thank everybody for being here. Make sure you're here tomorrow. It's going to be a big day tomorrow. Thank you guys for being here today.
All right.
Cheers,
Fred,
all.
thank you. Team,
Bye-bye.
thank you very much. Larry Tantarelli,
Enjoy
how
the
are you,
interview.
buddy? Thank you, Steve. How are
Dale,
you,
good
Larry?
morning.
Good morning. How are you, Larry?
Good. How are you doing?
Pretty good. My first question to you is, wouldn't you like to ride on a beautiful balloon? Would you like to?
It depends where the balloon is from and if it gets shot down or not.
All right. Well, I just, thought, it's kind of the topic of the day.
Yeah.
So what's floating away and what could get punctured by the CPI tomorrow?
That's a good question. The two biggest markets that I'm watching first are number one, bond yields.
Yeah.
So 390 is where I'd want to see these yields stay below. I'd rather see them break down below 340, 330. But the trick tomorrow is nobody knows how the CPI is going to come in. And more importantly, nobody knows how the market's going to react. Because as we know, the reaction to the number is much more important than the number itself.
Exactly. So I know you're also, I forgot the metaphor you use, but you use yields and the dollar, and one's the bus and one's driving the bus. Which one is it?
Yeah, so it's the dollar and then everything else. So the dollar is the bus driver and everything else, bond yields, stocks, commodities, they're all, so the dollar's got some strength that I think is cautionary.
Yeah.
It had a sharp reversal after that jobs number came in. That jobs number was through the roof. And you can see on this bar big reversal. It had some more follow through last week. First weekly close over the 10-week, going back to what is that? October.
All right.
And really, I heard, was it Blake that was talking about gold before?
Yeah.
Yeah, gold is at a very important level right here. So gold had a huge outside week reversal after that jobs number. It's holding the 10-week, but I agree with Blake. It does look weaker here.
Vulnerable. Yeah.
Yeah, it looks vulnerable. Now here's the thing: if we get a really good reaction to CPI and the dollar comes back down, then gold's fine. But right now, gold, definitely does look vulnerable.
Okay. Yeah, would that down there, those two moving averages that converge might be a great place to re-enter gold longs. What do you think?
It's possible. I always, in my head, I always expect a 50% retracement at some point. So, just by using round math, 1620, 1980, what is that? 360 points. So 180, anywhere from 1800, maybe 1820, 1840. That's if it pulls back. I'm not going to predict what happens tomorrow, because if the CPI is a good number and the dollar falls back down, then gold's back over 1900. So I don't have any predictions, but I do know the levels that I'm watching, and I know, what's the catalyst for higher and what's the catalyst for lower.
Is your VIX chart predicting anything? That's what it's supposed to do.
The VIX chart?
Yeah.
Yeah, what I didn't like about VIX last week is it closed back over the 10-week moving average. So if we take a look, it closed at 2053. It's trading higher this morning, and that was the first weekly close over the 10-week going back to October.
Yeah.
So that could be signaling the market's expecting a little more volatility.
Yeah.
So there's a couple things: the dollar higher, VIX higher, bond yields higher. I think all of those things just need to have us, on high alert.
Okay. All right. And sectors that really, a fantastic January, started off good in February. I know that you consider the S&P a range trade, correct?
Yeah, I think the S&P right now, if we just take a look on the chart, 3,800 has held on the weekly close for a while. 4,100 was resistance. I was glad to see it get through there, but I think 3,800 on the low side, maybe 42 to 4,300 on the high side. Now, I will say this: I think the S&P chart overall is a better chart than we've seen in a while. You had a higher high.
Yeah.
You had a higher low. You've got the 10-week through the 40-week. But this higher high, I think, was pretty significant. And if you take a look, it did it on some volume that came in. But, Dale, and you and I have talked about this before, I'm looking forward to the day when we can really just lock into the charts and we don't have to worry every day, well, the chart's doing this, but the CPI or the Fed or Powell says something. I'm looking forward to the day, and it might be, I don't know, a year from now before we get out of this hiking cycle. So for now, I'm just playing it a little bit more defensive. I've got more cash than usual. My position sizes are a little bit smaller because it's really hard, I think, to lock and load on any idea when you know that at any given time, because that jobs report really came out of nowhere and turned everything on a dime quickly. So, I've got my positions and I've got some charts. I'll go through some charts quickly for your listeners. So and I'm going to hit each sector, but we'll go quickly. So AMD in semiconductors, it pulled back last week, but it pulled back on much lower volume. It had a high volume breakout week, reclaimed this 40 week. The 40 week is trying to flatten out. Now, obviously, if the market pulls back more, then semis are going to pull back too. But I think this chart has some pretty good potential as long as it holds over, let's call it 74 to 75 in the bank stock. So look at this. Bank of New York,
even better.
It's higher for 14 of the last 17 weeks. It's been higher for 8 weeks in a row, 7-8 weeks in a row. And the 40 week, everything is turned up. So I'm not sure, why it's higher, but it
higher
is.
Yields, better spread.
But here's the thing. There's been a lot of volatility in bond yields recently. And this was up, whether bond yields went down or bond yields went up, this is still trending higher.
Bond yields been sideways, but they started to look like they were going to take a hit last week. There was a very negative bond auction last week. The 30-year was very underbid. Santelli gave it a D-.
Yeah.
A bad grade.
Yeah, bonds. I think with that,
but you could change it to a B+. When you used to bring your report card home, Larry, when you were a little boy, did you ever change a D- into a B+?
I used to hide my report card. I used to tell my parents that the dog ate it at school, but no, I don't think. I think when I was a kid, I was too scared to try any of that stuff.
All right, well, Anthony, looks like Anthony did it. He's laughing. So I know more of you guys changed a D- to a B+.
Oh, sure.
Right. Anyway, okay, so
emerging markets. We need to watch this because once again, this is just a weak dollar trade.
Right.
And it was starting to break out and that jobs report came out. So, I'm long emerging markets. So but my stop isn't too far off, but I'd like to see, obviously, and I think a lot of people would, but I'd like to see that CPI come in and give us a weaker dollar, but we just don't know. So Freeport, same thing. That's a weak dollar trade. So it's been holding this 10-week on the close for a while. But at the end of the day, whatever happens with the dollar, if the dollar reverses back down, then I think this is a good point to take a look at Freeport. But we don't know. So
if
outside
the dollar rallies, could it pull back to the 2 moving averages underneath? There's a lot of space there.
There's a lot of support at $40 and then at 37. So there's a pretty good support range, 37 to 40 on this chart. But I'm very small as far as the weak dollar positions right now, because I do expect tomorrow. What I do is I prepare for the worst. And then I look for the best, but I prepare for the worst. So, tomorrow my expectation is we get, and this is not a prediction, this is just my mindset. My mindset is we get a CPI that the market doesn't like, bond yields go higher, the dollar goes higher, all these things come down, and then we have to see where the smoke clears. I don't necessarily think that you're going to see new lows, but we could get pressed tomorrow, so we'll see. But if you take a look, defense, so Lockheed Martin, and I don't know that this is really a weak dollar play or anything like that, but Lockheed had a big breakout. They took it right down to the 40 week, which is that green line, took it to the 40 week. A lot of support here at 435. And then this, and this could have to do with what's happening with China, the balloons, all that stuff.
Well, I heard that the missiles, it is costly to take these down. Each one of these missiles are like $700,000.
Oh, yeah. Yeah. And anytime we still have what's happening, with Russia and Ukraine, that's been going on for a while. China and the US, that's back in the news, but Lockheed has been a nice longer term chart and very close to a potential, just by looking at the chart, if this can clear 490 to 500.
That's the best chart you've shown, that and the Bank of New York were the two.
I got another good one for you. How about Exxon?
Yeah. Wow. Yeah.
And I'll tell you this, Exxon, and I've got a position here, but Exxon has really stood out in the energy group because a lot of these energy stocks like Occidental broke down.
Yeah, a lot of them did.
A lot of them did, and Exxon broke out to new highs. Now, here's the thing last week, and I know you've got people, listeners that are in Europe. If you take a look, Shell is breaking out in Europe. BP had a big breakout last week. That's over in Europe.
Yeah.
TTE, which is based out of France, I believe, that's very close.
Yeah.
But what these stocks share in common is they have a very high dividend yield. They generally tend to be bigger market caps, and they're pretty well capitalized. Because if you take a look at Oxy, the Oxy chart's not a really good chart at all.
Yeah.
It started to break down last week. So, I think like every market with stocks, you really have to pay attention to each individual chart. You can't just really say, well, energy is good or bad, tech is good or bad, because in each sector right now, there's some really good charts and there's some charts I would stay away from.
Yeah, it's really become a stock picker's market.
It really is, and we hear that a lot, but because of this, because of this volatility and all this, and I couldn't tell you why Exxon's making a new high and Occidental was, breaking down, but we don't really need to know the why. Just, focus on the chart and what's happening.
Price action king, Larry Tentarelli. Anything you want to wrap it with, bro?
Yeah, sure. Let me tell people how to find me real quick.
Okay.
So my website is bluechipdaily.com.
Okay.
You can see other, technical ideas. What I do is I post daily technical alerts for members, every single day, intraday. I don't trade very much intraday. I'm not a day trader or a swing trader, but on my website, we've got people that are anywhere from long-term investors to short-term options traders. So what I do is I just post the ideas. I might post a stock like Mobileye, and then I might post a stock like Merck. So I post different ideas for the subscribers. On the Twitter, that's where you and I met at LMT978. And then I think tomorrow, is a very big day. I do. We've been seeing these posts online that inflation is dead and nobody pays attention to the CPI. And I think tomorrow, both of those things are going to get pressed. And I'd like to see a big move to the upside, but I'm prepared for, a little shakeout, and then we'll go from there and see where the smoke clears.
Okay. Prepare for everything and anything, because
that's right.
Because they both can happen all the time.
Yep.
So, all right. So from a pro, Larry Tentarelli, check him out. And thank you, Larry. Some great ideas you shared, some nice pearls. And I really like that metaphor about the Dixie being the bus driver.
It really is. It really is. Hopefully the bus doesn't run us over.
Yeah. May your cup runneth over, not the bus.
That's right.
All right, Larry. Adios, my trading warrior brother. Larry Tentarelli, everybody. Hope you enjoyed it. Check him out on Twitter. He's a great follow, LMT978, and he has a great eye for individual issues. So appreciate you being here, Larry.
Thank you, Dale. Have a great week, my friend.
All right. Be rooting for you tomorrow, buddy.
Same here, brother.
Do a nice dance tomorrow.
Oh, we'll keep our fingers crossed.
All right. So everyone, thank you for hanging out with us, and hope you enjoyed Larry and the team. Do some homework tonight and get ready for tomorrow. And don't just count your pips, count your blessings. See everyone then. You're very welcome, Monica, Patrick, Sinatra. Adios.